Hello, my name is Chad Hart. I'm an extension economist at Iowa State University. And today I'd like to provide a brief update on what we're seeing in the crop markets, especially after USDA's reports, not only finishing out September with the grain stocks report, but we've also got the October WASDE report and crop production report that is out there. So we've seen the numbers move quite a bit over the past 2 to 3 weeks. Those adjustments have made for some fairly sizable, adjustments in both what we're seeing in terms of supply and demand for the crops as we look out there. So let's get right down to the numbers. As we're looking at the corn market, the idea is that as USDA has looked at this crop, it continues to get smaller. We saw actually them adjust the acreage down as they got in the data from the Farm Service Agency. So they knocked the acreage just a little bit, and we continue to watch them adjust the yield down as we see the drought impacts building more and more as we move through harvest. And so when we look at, sort of where we started at the beginning of the year with the thought of possibly another 15 billion bushel corn crop, now we're down below 14 billion bushels. So we have seen a sizable downshift in that supply over the past several months. But along with that, if you look down to the gray box in the middle there, we're also seeing USDA adjust that demand side down as well. And in this case, those adjustments have been sort of across the board. If you look between the 2021 and 2022 columns, you can see USDA is looking for less feed demand, especially from the cattle industry as it has shrunk underneath the pressure due to the drought. They're looking for less corn usage for ethanol as we've seen a slight pullback in the blending as we're looking there and the production of ethanol. We also see a slight pullback as we're looking at the exports. And I'm probably going to spend a little bit of time concentrating on those export cuts as we look here. Because as you look at what we're seeing in this downshift, you basically have reduced corn usage overall by over 800 million bushels. So we've seen production come down about a billion, usage come down about 800 million. So, sort of, in comparable range with each other. We do still see tightening ending stocks as we look toward the end of the 2022 marketing year. And USDA is projecting a little bit higher price as we look to the 2022 crop. For 2021, they're up now at $6. For 2022, they're looking for $6.80 for that season average price as we look out there. So, very strong prices, but we are worried about demand really starting to slip here, and I would say it's the international side that we're most worried about. Now, as we look at the soybean market, sort of a similar tale there. They actually adjusted acreage down slightly, about 600,000 acres. But just like with corn, we've seen that yield slip as well. And so that was actually the big surprise coming out of the crop production report this last time was the cut we saw in soybean yields, carving out about 7/10 of a bushel this last go round. And so production is now coming in at a little over 4.3 billion bushels, so down, overall, compared to about 2 months ago, we're down over 100 million bushels. So supplies shrinking a bit, and we're also seeing that same sort of shrinkage as we look at usage here with soybeans as well. Now, domestic crush remains strong, but not quite as robust as USDA had earlier projected. But again, just like with corn, the major aspect here that we're seeing in terms of loss of usage here would be on the export side as we continue to see that number shrink. As you look here, you can see that we reached a high point in 2020, then 2021, a little bit lower than that, 2022, an additional cut here. And so we've seen about a 10% loss overall in exports over the last couple of years. Again, just as with corn, though, we're looking at tighter ending stocks at the end of 2022 and slightly stronger prices again. As we look at the 2020 run crop and finishing that marketing year out, average of 13.30 a bushel. As we look out for the 2022 crop, the crop that's being harvested right now, we're staring at a $14 average as we look out there. So, what were the big shifts as we looked at the reports this month? Well, there was a lot going on with the yield side. This is the yield map as it currently stands right now. And you can see any state here in red, that's a state that USDA has been lowering that yield compared to last year. So you can see most of the country is seeing lower corn yields. with a lot of cuts coming from not only the drought-stricken plains, but we're also seeing smaller crops out of the southeast as well. Southeast in 2021 had some record crops down there. We've seen less favorable conditions here in 2022, and that's led to a drop in those yields as well. So we look at the nationwide average, just under 172 bushels per acre. So that's down roughly 5 bushels compared to last year. When we look at the soybean market, sort of similar tale again. Most states did see a drop in those soybean yields. Some of these later rains have been helpful, but not quite as helpful as what we saw last year. And again, you can see the dryness, especially across the plains, truly impacting the yields there. What is also interesting here is as you look at the northern plains, so North Dakota into Minnesota, you do see some better yields up there, and that's because the drought hit them less severely this year than it did last year. And it's not that they had really amazing crops this year, it's just relative to last year, they do look a little better there. But again, just like with corn, overall year over year, yields are down because of the drought. Now, while our yields are down, like I say, we're worried about slippage when it comes to the usage side. And probably the biggest area we're concerned about that is in exports. And it's because we're off to a slow pace, if you will, especially compared to the last couple of years when we look at our export sales. This is a graphic showing you those weekly export sales as they build out through the marketing year. So the graph starts September 1 of each year because that's when the marketing year starts for each of the crops. And you can see here, the blue line is the 2020 crop year, the green line is 2021, the red line, the short one there, that's what we've done so far here in 2022. Then the black line is the 5-year average. And I'd ask you to pay a lot of attention to that 5-year average line because as we look at a soybean market, that's basically where USDA says we're going to be at the end of the year, shooting for about 2.15 billion bushels of soybeans being exported. I'm sorry, about 2.045 billion bushels, so just above 2 billion bushels. So as you look here right now, we're running a little bit ahead of that, but not much. And I'd say the troubling aspect with this line is the slope of that red line. You don't see as much growth in exports week over week as we're used to seeing at this time of year. The black line is steeper than the red line. So we're well off our record pace from 2020. We're right down around that average. But when we look at country by country sales, it is a mixed bag right now, but we are seeing some stronger sales into our biggest customer, China. Now, last year they were down as they sort of rebounded, if you will, sort of the after effect of the phase one trade deal. We saw them down significantly last year, but now back up somewhat from those lows of last year. They are our number one market as we look out there. In fact, as you look at the graphs I show like this, they're all built the same way. The idea is the first 6 bars have country names listed with them. Those are our top 6 export markets in order. So in this case, China's number 1, Mexico number 2, Egypt number 3, and so on. Now, as we look at beyond China, what we see is a little bit of additional growth, but most of that being hidden in unknown destinations out there. And I'm going to argue a lot of that goes with the China bar as well. But you do see Mexico up slightly and Japan up just a little bit. So we are seeing some additional growth outside of China. I would say the biggest challenge right now in the soybean market is figuring out where those crops that usually rely upon oil seeds coming out of the Black Sea region and where they're going to go. Right now, as you look at North Africa, Europe, and the Middle East, you do see them purchasing more right now while they can from Ukraine. The question long term will be, can they continue to source enough to meet their needs, or will we see them come back towards U.S. soybeans as we get deeper into the marketing year? Now, with corn, it's a much more challenging picture when it comes to the export sales right now. As you can see here, 2022 is well off the pace we've seen the last couple of years and is even well behind the 5-year average. In fact, as USDA projects right now, we'll never catch up to that 5-year average line. And just like with soybeans, again, the slope of that red line is concerning here. We have seen very slow sales to start off the 2022 marketing year right now. And when we look at the country by country breakdown, it's been troublesome across the board. In fact, the only major market right now that's showing any signs of growth is Honduras. And in this case, that's by 500,000 bushels. So you really can't even see the line there, but we do see slight growth there, about 5% up. All the other major markets are down at least 20%, if not more. The biggest cut coming from China again, they had really been our big export market for corn, especially in 2020. They had backed off in 2021, and they're still backing down here as we look in 2022. But they have a lot of company, as you can see: Mexico, Japan, Guatemala, Colombia, all the major markets down significantly as we look there. And I think that's the major challenge for the corn market is, do we get to see some additional sales out there somewhere, especially as we're looking at the global feed market finding, if you will, more feed than they were originally thinking they would find. We are seeing the wheat market sort of get bounced around a lot as we figure out what's coming out of the Black Sea region, and we are seeing expansion in other parts of the world in wheat. A lot of that wheat is filling in feed globally, and that's where U.S. corn competes as well. And so that has been the challenge. Is right now globally, I think U.S. corn is losing that competition to fill those feed bins as we look at worldwide. Not only do we see slower export sales, though, but we're also seeing a slowdown when it comes to the ethanol industry. This is a look at the weekly grind of corn for ethanol, and you can see as you look to the very far right of the graph, that line has dropped off quite a little bit over the past 6, 7 weeks. We have seen a pullback. Now, usually there is a pullback here within the early fall, as a lot of those plants do slow down or shut down for a little bit for some maintenance before they ramp up as the harvest really kicks in and that fresh corn comes to the marketplace. So over the last week, we have seen a bounce back up. You can't really see it in the graph, but it is working its way back up, but it's still well below that 100 million bushel per week range that we'd really like to see for this market. And so that's another challenge, if you will, for the corn market is, how will ethanol respond as we move into the winter season where driving tends to be a little bit less, and so we'll see a little bit less pressure from the energy markets. USDA's projections say that we should average out about 100 million bushels a week here, so we're not that far off the pace, but we would like to see it pick up here as harvest really ramps up. But when you look at where the markets are at right now, they're in a fairly strong position as we look out there, and sort of an agreement with what USDA has projected out there. Futures prices, as we look at those for the 2022 crop, are holding in that 690 range for the most part, as far out as July of 2023. So very strong prices there. The big black numbers here are indicating the season average price estimates from those futures market prices. So USDA's forecast is 680 as we look out for 2022. Futures market says 675, so fairly darn close there. It's good agreement there. And as you look deeper into next year and think about the 2023 crop, the markets are indicating a drop back, but still holding above $6. So they're showing some pullback, and I think that's some concern about global economic conditions out there holding us back a little bit. But I think they're also signaling that we're going to hold these prices for a while. It's not going to be a replay of what we saw coming out of 2012, 13, 14, where we saw significant drops in prices after the drought, but more that prices will hold up for at least a while. We have seen good demand. In fact, when we look here, even with the pullback in exports and ethanol, we're still talking about over 13.5 billion bushels worth of demand out there for our corn, and that's helped support prices not only in the short term, but in the long run. When we look at the soybean market, we do see some carry building into the 2022 crop here, which it had been missing for the early part of this year. And if anything, USDA is actually a little more bullish on price expectations than the market is right now. USDA is out there at $14 as we look at the 2022 crop. Futures market's holding in this 1366 range. So 1366, 1370, and it has been somewhat volatile as we're trying to really figure out, especially given the strength, if you will, that has to come from China to support this market. How long will they continue to buy a little more than they did last year? Now, as we look deeper into 2023 and 2024, just like with corn, we do see those prices backing off, but still holding at very strong prices as we look out there, maintaining 13.50 all the way out till July of 2024. So, from a pricing perspective, we're still in really good shape. We're not at the highs that we saw earlier this year, but we're also not at the lows we experienced just about 2 months ago. July was a rough month for the marketplace here as we tried to figure out just how much the drought was impacting production. Now that we've seen that no, there are some impacts out there, the market has built back in some weather premium here that's helping support prices here throughout the fall, and we've got just enough purchasing going on that is supportive of prices looking forward. And as we look out to that 2023 crop, these prices should be strong enough to hold acreage as we move into planting next spring. Well, that's a quick update on what we're seeing with the markets. With that, I want to thank you for your time. We'll do these about every month as we move forward, usually around the WASDE reports, as we get that especially update on how usage is going as we move through the winter months, because it's here in October moving into November where the market's concentration shifts from looking at the supply side of the market to the demand side. And that's where those, I especially say, those weekly export sales are critical as we move forward, because that's going to show us just how well global demand is holding up underneath the pressure we're seeing from global economic conditions. With that, my name is Chad Hart, Extension Economist with Iowa State University. Thank you for giving me a little bit of your time.